Chapter 1, Not for Profit Organization. That means they have formed with the intention to do some or rendering some services to its member and also to the public. Here, now we are going to learn the preparation of income and expenditure and a balance. This is called final accounts of not for profit organization. So you will be given the details or the receipts and payment of a club, and also some adjustment will be given to you. From that receipt and payment account, and also with the help of the adjustments, we have to prepare on income and expenditure. Income and expenditure is more or less like a profit and loss account, because all expenses are debited. Expenses and losses are debited and the incomes and gains are credited. So it is also a nominal account. Not only preparation of income and expenditure is enough, but also we have to prepare the balance sheet, which will show the financial position of the club at the end of the year. So before preparation of income and expenditure and a balance sheet, we should know the distinction between capital expenditure and revenue expenditure, because only revenue expenditure are taken to income and expenditure account, and capital expenditures are taken to the asset side. Capital expenditures are asset side, taken to the asset side. Like that, the revenue receipts alone taken to the income side, capital receipt such as donation for building, life membership fees. So specific donation, fund, life membership, those items will called capital receipt, that will appear in the liability side. So regarding revenue expenditure and capital expenditure distinction, first basic difference is the revenue expenditures are recurring in nature, but capital expenditures are non-recurring in nature. The second one is short-term benefit. The revenue expenditure gives short-term benefit. Suppose if you are paying rent, that is for 1 month. Salary means 1 month. So recurring expenditures benefit for short time, that is for 1 month or 1 year, not more than 1 year. But capital expenditure benefit goes more than 1 year. Purchase of building, purchase of furniture, purchase of machinery. So such are called capital expenditure. So no change in the value of asset. That is, no change in assets means no change in the value of asset because of revenue expenditure. But capital, due to the capital expenditure, the value of assets increases. That means you have bought an additional asset. That is called expenditure, capital expenditure. Due to revenue expenditure, the fourth one is due to revenue expenditure, the incomes are maintained, like whitewashing a cinema theater, or doing some small repair for machineries and furnitures, small repair for building. Those are called revenue expenditure, but they won't increase the value of asset, or they won't increase the earning capacity, just they are maintaining. But capital expenditure means purchasing of additional furniture for a cinema theater. So that increases the earning capacity, so increases the income. Revenue expenditures are day-to-day expenses. Revenue expenses are day-to-day expenses. But capital expenditures are nothing but purchase of assets. So they are differentiated by recurrence, benefit, value of asset, increase in the earning capacity, and also the day-to-day, the nature, the day-to-day expenses are rare expenses such as purchase of assets. Okay, after distinguishing the expenditure and the income, we can get into the preparation of income and expenditure. So let us learn how to prepare the receipt and payment, that already learned. But here the receipt and payment is a summary of cash book. It is maintained under cash basis. It is a real account. Real account means debit what comes in, credit what goes out, is the rule for real account. So in the receipt side, all the cash inflows, like that telling, cash comes in, such as donation, subscription, entrance fees, interest on investments, interest received from bank, sale of old furniture, sale of old tickets. So those are called receipt. That means the organization has received money from the outside to the club or association. But at the same time, payments means like salary, repairs, then purchase of furniture, miscellaneous expenses, investments, insurance premium that is paid, then purchase of billiards table, paper and ink, that is commonly called as printing and stationery, drama expense, because we have sold a ticket for conducting a drama, that same that we have to do some expenses for conducting the drama. So at last the cash in hand. So there will be opening cash in hand and closing cash in hand, because it is a summary of cash book. More or less it is a cash book. Simply telling, it is a cash book. So additional information also will be given to you, that subscription in arrear for the year ended 31st March 2019 and subscription in advance for the year 31st March 2020. Subscription for, so here we should assume the 20 March 20 as the current year. March 2019 is the previous year. Normally subscription for current year is to be added. Subscription outstanding for the previous year is to be deducted. Okay. Now just I want to tell you something about our day-to-day life. Do regular exercise and sleep more times. Especially in the night time, you have to sleep at least for 6 to 8 hours. Have a pranayas or do some yogas, which will be much help to develop your health, also which gives you immunity power. So kindly have it as a regular activities. Among all your activities, at least you have to spend minimum 20 minutes to 30 minutes. Either you can do yogas or pranayas or some other prayers, silent prayers. But even you can have a prayer for half an hour without any disturbance. That will fetch you a good health and also a free mind. Then you can do anything. So you please follow such activities which helps or develop your healthiness. That is, already we know that health is wealth. Health is wealth. So concentrate more on your health by doing such yogas or exercise and pranayas. So, or you can have in the morning, have a breathing exercise. Also, we can do anything. Just be active. Don't sleep more in the daytime. Not you should not sleep at all. In the daytime, you should not sleep. For that, you have to sleep minimum 6 to 8 hours in the night time. So sleeping at late night will spoil your health. So kindly keep it as my kind advice. Okay. Let us go through the additional informations, that is subscription in the year. That is previous year is to be deducted, current year outstanding is to be added, but previous year arrear has been given and current year received in advance. Subscription received in advance for the year 2020. So both are to be deducted. Insurance premium outstanding, that is expenses outstanding, is always added. Then miscellaneous expenses prepaid, that is current year prepaid, is to be deducted. Then interest 8%. Interest has accrued on investment for 5 months. Accrued for 5 months, that is outstanding income. It is an asset. So you have to calculate 8% interest on investment for 5 months. That is outstanding income. So it is to be added with the existing interest on investment, also to be taken to the outstanding interest, that is income, in the asset side of the current year. Then billiards table costing 3 lakh was purchased during the last year and rupees 2 lakh 20 were paid for current year. That means last year we purchased 3 lakh. For that now we have paid 2 lakh 20, mean this is not current year expenses. This is not current year expenses. Okay. Let us convert this in recipient payment into income and expenditure. So sometimes you may be asked to prepare only the income and expenditures. Here for the year ended 31st March 2019, that is salaries. Where is that? Salary which was in the credit side of the recipient payment was taken to the debit side, that is salaries. Repairs, it's a revenue expenditure. Miscellaneous expenses is also a revenue expenditure, but we have to deduct the current year prepaid. Current year prepaid 900 was deducted. At the same time, any expenses prepaid will be again taken to the asset side. So don't forget, now you have to deduct that prepaid miscellaneous expenses, that is 900 was deducted from miscellaneous expenses. The remaining was taken to the outer column, but 900 rupees will be taken to the balance sheet asset side. Then insurance premium 2000, but there is an outstanding of rupees 400. That means any outstanding expenses is to be added, but outstanding expenses is a liability. Outstanding expenses is a liability. So here you have to add at the same time, it should be taken to the liability side of current year balance sheet. Paper and ink, already told, this is nothing but printing and stationery. Ink, papers are called printing and stationery. That is a revenue expenditure. That drama expense, that is every year they are conducting some drama, so it may be treated as revenue expenditure, that is 5,000. But incomes means the donation. Donation means without any specification. If it is given, mean it is a general donation. So we should take it to the income side. But if the same donation given with some specific purpose, mean it should go to the liability side. It will go to the liability side. So now I have taken the donation. When there is no specification, it is treated as income. The subscription means current year outside. So here, sorry to say that current year is 2019. So current year outstanding is added at the same time current year received in advance, that is in 2019 we have received some advance for next year, that is 2020. That is why they have deducted that advance 3500. So adding current year advance subscription and deducting current year advance, that is 1,25,500. Entrance fees, it is a routine revenue receipt. It is a revenue receipt. So that is also been taken as income. Then interest on investment is rupees 1000. Is rupees 1000. Then as per the the last adjustment, as per the last adjustment, that is fourth adjustment, I think so. 8% interest has accrued on investment for 5 months, means that is a outstanding interest. The interest accrued or receivable. So already we have received 1000 rupees, but yet there is a one more 2000 rupees is outstanding, mean the current year income on investment, that is interest on investment, is 3000. Then we have also received some interest from bank, that is 4000. Sale of old newspaper. Sale of old newspaper is a revenue receipt, but at the same time sale of old furniture is not to be taken to the income side. It should be deducted from the asset. It should be deducted from the asset. So if any asset is sold, that should not be treated as income. Okay. Now sale of old newspaper is 1500. Sale of drama tickets, that is 10,500. Now the income side is being greater. The income side, that is credit side, is being greater, that is 2,04,500. that I have taken it to the debit side and finding the difference, that is 1,66,500. that is the surplus. The surplus is normally called as the excess of income over expenditure. The surplus is to be called as the excess of income over expenditure. So here there is a surplus of income. It is more or less what we calculate like net profit. So here we should not say it as net profit, but instead of that we call it as surplus. Also to be mentioned as excess of income over expenditure is 1,66,500. But regarding final account, that is regarding final account, we have to prepare current year balance sheet. That is enough, but they may not give you the opening capital fund. That is the capital fund in the beginning will not be given to you. So for that purpose of calculating the opening capital fund, we have to prepare the previous year balance sheet. Here they have prepared the opening balance sheet, that is previous year balance sheet. Closing balance sheet means current year balance sheet. Current year balance sheet. Both should be prepared. So now we have to take the opening cash in hand. That means from the receipt and payment, opening cash in hand and cash at bank. If suppose it was given, it was taken to the balance sheet, that is 26,500, cash at bank 72,000, and outstanding subscription, that is 9,000, prepaid miscellaneous expenses 900, investment 60,000, accrued interest 2,000. That you know that accrued interest is 2,000. That was added. That means outstanding interest is to be added with the investment, that is 62,000. Billiards table is an asset. Billiards table is an asset for a club. So both furniture and billiards table are shown in the asset side. So cash in hand 26,500, cash at bank 72,000, outstanding subscription 9,000 for current year. So it has been sold in the current year. Then prepaid miscellaneous expenses is all an asset, investment asset, but outstanding accrued income is also an asset. So that was added. The total is 62,000 billiards table and furniture. Then regarding the liabilities, the subscription received in advance is a liability. That means during 2019, we have received some advance for 2020, that is current year liability. The subscription received for 2020 in 2019 is a liability for 2090, but it will become as income for 2020. So outstanding insurance premium, any expenses outstanding is a liability. Outstanding expenses is a liability, especially this is for current year. So we have taken it to the liability, so that is 400. So how to get the capital fund? It was not given. It will not be given to you. That is 3,60,000 will not be given to you. For calculation of such capital fund, before closing the current year balance sheet, you have to prepare the opening balance sheet. That is opening balance sheet as at April 1st. That is opening date of the club 2018. So here the opening cash in hand 40,000, opening cash at bank 1 lakh, billiards table which was purchased in the previous year. They told you in the adjustment. They have given you in the adjustment, that is billiards table 3 lakh. So previous year's total assets is 4,40,000. 4,40,000. That was carried forward to the liability side. There is a difference. That means creditor, that was shown. Creditor for billiard table is 80,000. So deduct the 80,000 from the 4,40,000. The remaining balance, that is a balancing figure, is called capital fund in the beginning. So after closing the opening balance sheet, we can get the capital fund in the beginning. That amount was carried forward to the current year liability, and also we have to add the surplus. We have to add the surplus, or we have to deduct the deficit. What is deficit? Deficit means the excess of expenditure over income. The excess of expenditure over income. If you got the deficit, you have to deduct it from the capital fund. But now in this exercise, we have got only the surplus. So the surplus was added with the opening capital fund, and the total was taken to the outer column. Now the balance sheet got tallied. That is both sides, that comes 5,30,400, 5,30,400. So as far as final accounts concerned of a not-for-profit organization, we have to first prepare the receipt and payment, that is nothing but the summary of cash book, then income and expenditure, and a balance sheet. So that I have given you in a short form. That is, thus we have learned how to prepare the final accounts. So this is also final account. Not only trading company prepares final account, but also not-for-profit organization also will have to prepare the final accounts. So thus we have learned how to prepare the final accounts of a not-for-profit organization at the end of every year. So final account means not closing the business, but closing that particular accounting year. So the accounts which are prepared at the end of every year is called final account. So regarding not-for-profit organization, what are the accounts to be prepared? That is, first, the preparation of receipt and payment account. Receipt and payment account is nothing but a summary of cash book. Both cash receipts and cash payments are listed in that receipt and payment, irrespective of the year as well as irrespective of the nature of expenditure, whether they are receipt or capital revenue expenditure or capital expenditure, all are taken in one account is called receipt and payment account. Then we learned how to prepare income and expenditure, also how to get the surplus or deficit. So the purpose of preparing the income and expenditure is to find out the surplus or deficit which arise during this year. So income and expenditure is more or less like a profit and loss account. There in a trading concern, we prepare it as trading profit and loss account, and also we find the net profit and net loss there. Here we should not say it as a profit or loss. It was called as surplus or deficit. That is, net profit is called as surplus, net loss is called as deficit. So only by preparing income and expenditure account only we can find out such a surplus or deficit. But that is not enough to close the account. Accounts means, especially final account mean, that should end with a balance sheet. That should end with a balance sheet. So the last step in every final account is the preparation of current year balance sheet. That is balance sheet for current year. And also, if needed, because any missing information is arises, that you have to prepare the previous year balance sheet also. So receipt and payment is the first step, income and expenditure. From that we have to prepare the income and expenditure second step. After that, finally we have to prepare the current year balance sheet. But sometime if any missing item of the opening, previous year item, in that we have also prepared the previous year balance sheet. Okay.